with the DXY. So first of all, with the DXY, we forecasted a potential fake out of the third trendline tap. It didn't really fake out and close back inside, which was the original plan. I was expecting, a fake out and a close back inside. But what's happened is that price, in fact, formed a extension of the pattern. So now it's formed a running channel. Now inside the running channel, what's happened? We go to the 4-hour time frame and we can see that price has closed back outside. It's also formed a bit of a wedge pattern, as you can see. And this wedge pattern has now extended into two multiple patterns. So first of all, the original analysis on the DXY was simply a fake out of the pattern, a close back inside, a retest, and a continuation. We can see the compression followed by the momentum to the downside. So I was expecting price to continue south. However, that never happened. So what happened next was that this original flag, as you can see, momentum, compression, momentum, it then formed a larger flag, as you can see. You can see the larger flag. I was then expecting a depreciation from the top of this flag to drop. Obviously, that never happened. What happened next was there was some momentum to the upside. You can see the bullish momentum. Then what's happened next is that price is now compressed, forming a potential drop to the downside, which was forecasted. As you can see to the left, there was a potential double top with a compression just above, which was pointing out a potential drop to the downside. So that never happened as well. We still capitalize on some moves on Euro USD, but what I'm trying to say is that you need to constantly adapt and evolve your patterns and structure. So right now, what is the market telling us? If we go to the 1-hour time frame, we can see that price has formed a pennant where we can expect a break to the downside, but that never happened. In fact, what happened next was that this pennant then became a bullish flag. It was originally a bearish flag and now it's a bullish flag. So now we need to adapt to the market. So right now I'm expecting a potential drop or a small stop hunt and then a rally to the upside. However, since price is also inside this potential trend line, we can now update the pattern and now everything changes. So now there's a bit of an expanding formation. So one or two things can happen. Either a rally to the upside, or if we get a break to the downside with momentum, then we can finally see further downside on the DXY. Minimum to at least this level here. That's a take profit one. Once this trend line breaks now, then it's all clear for the DXY to then retest the larger pattern of the structure. So with the DXY, we just need to remain really, really patient. We just need some momentum to the downside, some commitment from the sellers, and then we can look to get involved for a nice long-term short position on the DXY. We can even update this, and now it's formed a larger channel. So notice how these patterns are constantly evolving. And just forming larger patterns within patterns. So right now, what takes precedence is what's happening right now. So originally, we had this expanding pattern formation, but now we also have this small bullish wedge. But which one is going to be more important? This small pattern here or the larger pattern that's in play? So now, since we do have this larger structure in play, we can also expect a strong decline and rejection from this larger channel. So we've got one tap and a potential two tap here. And now price is slowly depreciating. So what happens next is what's going to take precedence. So either a rally to the upside, but most likely a rally to the downside because the larger pattern is in play. We've got one tap, two tap. I'm expecting now a third tap since this is the first and the second tap. So now we can forecast in advance what can actually happen. So depending on what happens next is really, really important. Either a rally to the upside or a rally to the downside. What happens next? We just need to adapt to the market. But for now, I'm still expecting further decline towards the outer structure of the pattern. So as you can see, like I always mention in all my live streams, every time we see a double top, one top, and a third top, if we get some compression to the upside, it's a double top trap. So I'm expecting price to now drop to the downside. But we need to see what happens next. We need some commitment and some confirmation from the buyers and the sellers. So next on the watch list is dollar yen. So dollar yen, if we zoom into dollar yen, this was a trade taken recently over here. It was an 8R, which happened sometime last week. But the reason I left it open was to show you guys the same schematic which was playing out, which was again, liquidity filled from the left, it then compressed and it formed a double top. It formed some equal highs. Market psychology is telling us that after the equal highs, I'm expecting a stop hunt. This was the first stop hunt, as you can see. It triggered and then it dropped. Then price compressed and it formed a 1 tap, 2 tap, and a 3rd tap fake out in confluence with a stop hunt of the first stop hunt. So this is a double stop hunt. This is where I got triggered. FOMC happened a few hours later and it was a very, very good trade. So I'm still taking the same schematic, and it's what's happened here. Again, we've got a double top, equal highs. We then have compression to the upside. This level here, as you can see here, this was the first stop hunt of the equal highs. What's happened here? We've got the equal highs and then we have the first stop hunt. But this first stop hunt needs to be in confluence with a hidden liquidity level on the smaller time frame, such as what's happened here. So after this level, what's happened is that I had my order here on the next level of liquidity on the smaller time frame, which was in confluence with a 3rd tap of this structure. And if we zoom into the actual entry, and my thought process was, okay, I got triggered. It was a really, it was a really good trade. Wait, hold on. Delete this. The target originally, it was 11R, which is pretty normal when you catch it right. So again, I got triggered here. Good trade 1, 2, 3, but then it consolidated for a while and it was just forming wicks and I wasn't really trusting it. So the reason was that normally when I enter a trade, there's a factor of 2 things. One, price approaches my levels in deceleration and a compressed manner. Look at the difference between this piece of information prior to my entry compared to this piece of information prior to my entry. Before, when I got triggered, the buyers and the sellers were showing small bodies, small wicks, and my entry was a sniper and it formed a shooting star. On the other hand, following the same schematic, price approached my level with some momentum. 2 strong bullish candles, still got a sniper, but it wasn't really too convincing compared to what happened here. Then I saw this particular candlestick. Let me just delete this, can be a little bit annoying. I saw this particular candlestick, this bullish candlestick, and after this bullish candlestick, hold on, I closed my trade around here. Fortunately, I did because it would have been a loss. So instead of taking a full 1R loss, I took a 0.2R loss. Simply because a factor of 2 things. I wasn't feeling comfortable with the trade. So it's a great example of knowing when to cut your losses early. So again, the way price approaches your level, is it going to be in a corrective manner with lots of wicks, small bodies, and then your entry? Or if it approaches it with this, with momentum? If it approaches my level with momentum, it's not really a good trade to be in. So once it got triggered, I was monitoring it really, really closely, and I wasn't really feeling comfortable. Fortunately, I closed it on a small loss, and it just kept on rallying. And it's just how it goes. You're going to take losses, but you need to constantly adapt to what the market is telling you. If you're fixated on one outcome, and you're being stubborn with your stop loss or your entries, or even your exits, you're really just self-sabotaging your edge. So the market is not perfect, so you need to constantly adapt to what the market is telling you. So now dollar yen is completely invalidated my setup, so now I'll just have to wait for it. So that was dollar yen. Next on the list is euro pound. Okay, euro pound is an interesting one. If we zoom out to the daily time frame, what is actually happening now? We can see some equal lows. 1, 2, 3, 4, 5. So normally after some equal lows, which is just a larger extension of a double bottom, there's always a fake out. So again, we have the fake out, actually a really big one with lots of compression to the downside, taking out a swing low and filling liquidity on the smaller time frames to the left. Price then closed back inside the larger compressed pattern and has formed some former schematics on the smaller time frames. So if we go to the 4-hour, what can we see? Okay, we've been triggered, we've got some equal lows. Following the equal lows, as you can see here, there's one equal low here and a second equal low here, and then we've got a stop hunt. So this is a level where you can enter, but personally I would prefer taking the second entry. So this is entry 1, then anything that's happened next is just a pullback. Then we have the commitment, we have the rejection of the first entry, and then it's rallied. Fine, it's rallied. It's now formed some equal highs. This is leaving some clues in the market. So many traders will have their stop loss just above this equal high, also above this lower high over here, and I've got a liquidity level just above. So I'm expecting a rally to touch this level, but now it's dropped, and I'm expecting a factor of a few things. So if we zoom in to the smaller time frame, but before we do that, long term for euro pound, I'm expecting a strong rally to come back to the original swing low that took out the previous equal lows. So that's the long term target for euro pound. If we now go to the 1 hour time frame, I'm still trading the same schematic that we saw on dollar yen, which is some equal lows to tap a level of unfilled liquidity. So right now there is no equal lows, so I'm not really going to be taking this trade until I see some equal lows either on the 15-minute or the 1 hour. Then I'll be interested in an entry. So once the level gets triggered on some unfilled liquidity following some equal lows, the double bottom, I'll wait for the second entry, which should be a stop hunt. So first of all, we've got a stop hunt of the equal lows. This is the first stop hunt. I'll be waiting for the second stop hunt of this level, then I'll be looking to get involved. So once I see this schematic at either plan A or plan B down here, then I'll look for an entry. That's one way of entering this particular market. Then plan B would be, if I just see some compression, then I'll look to get involved. So with euro pound, I just need to remain patient. There's nothing really clear right now. Just have to remain patient. You know, the setup probably won't come until later, 2, 3, 4 p.m. So for now, you know, on the 15-minute, still nothing happening. Still nothing happening. I need some equal lows. So that's the game plan for euro pound. It could happen today or it could happen next week. So I'm expecting a bullish rally on euro pound, but I need a stop hunt. So next on the list is euro USD. Euro USD looks interesting. Let me just remove all this. If we go to the 4 hour, what can we see? We can see that price has filled liquidity to the left. It's done a stop hunt of this main swing low, so that's a good confluence. We now have a potential fake out of the third trend line. 1, 2, and 3. We've got a fake out. Notice how I'm not keeping my trend line there for 2 reasons. One, it's just going to complicate things and I don't need it. You need to separate the pattern and focus on what's relevant. So right now what's relevant is this bullish compression pattern. So on euro USD, I'm now expecting a rally to the upside to tap this level of unfilled liquidity. As you can see, it's broken momentum, filled a retest, filled a bit of a gap. So this level of liquidity is in confluence with a third tap of structure. 1, 2, 3. So that's the game plan for Euro USD. If we zoom into the 1 hour time frame, what can we see? So first of all, this is now irrelevant. I can delete all this. This piece of information is what takes precedence. So also what I like to do is simply just keeping my charts simple and clear as possible. It's just telling me that the orders have been filled. So right now I'm expecting a strong rally to the upside, so much room. But for now, would I be interested in a rally? No, not necessarily, because what's happening? We've got momentum and now we have some compression, as you can see. So because there's some compression, I'm staying away from the market until I see some commitment from the buyers, either a strong rally, and if we do get a strong rally, then I'll look for some compression to the downside or some equal lows, and then I can look to get involved on a stop hunt. But for now, you know, there's nothing really clear and the price action is pretty bearish. So what could potentially happen now is this could drop, take out this low, or form an equal low, a double bottom, do one more stop hunt and then either rally or a further second stop hunt and then rally. So with Euro USD, it's in an interesting area. It's really low, but I need confirmation. I need commitment from the buyers and I need a stop hunt. Right now, taking this trade, following momentum to the downside and a bearish flag, is just very, very risky trying to buy it. If anything, it's a good sell back down to this level here. But I'm waiting for the long. I just need some commitment from the buyers. So that's the game plan for Euro USD. Next on the list is New Zealand CAD. So let me just walk you through New Zealand CAD. If we zoom into the daily time frame, you know, price was approximately here. We zoom out. Again, we've got a stop hunt of this level, this level, this level, and then this level. Some unfilled liquidity that was mapped out from a while ago in confluence with 1, 2, and 3. So once the third tap was complete and it depreciated with momentum, it was then likely to tap this third structure, right? So if we zoom into the 4-hour time frame, and I'll walk you through my thought process. So I saw this pattern, I saw momentum to the downside, I saw price expanding and compressing. Looks like it doesn't know what it's doing, but once you have a clear picture, you can anticipate it in advance. So I'm expecting this level to be filled. This level of unfilled liquidity, it rallied with momentum and it's filled to retest. There's a large gap here. So I know there's a high probability for price to tap this level. So I'm looking for a sell setup. Again, waiting for the same schematic. So we have liquidity filled on a smaller time frame. We then have some equal lows. Following the equal lows, the same schematic I'm trading over and over again. So for example, we have a drop, we have a rejection of some unfilled liquidity, then we have a pullback, and on the pullback, I normally like to wait for some equal highs. Once there's an equal high now, I'll wait for a stop hunt of the first equal high, let it drop, then I'll be waiting for a stop hunt of this level, and whatever happened next, I'll just catch the stop hunt and then look to get involved. So this particular schematic, I'm trading it over and over again. Again, we've got the equal highs and we've got the first stop hunt, then I'm catching the second stop hunt. Again, we've got the equal highs around here, and then this is the first stop hunt. So now I'm expecting some form of a pullback to take out this first stop hunt and tap a level of liquidity that I spotted on the smaller time frame. So that was the thought process with New Zealand CAD. It looked like it was going to go away, but I know that since there's unfilled liquidity, I know it's going to be a magnet to that level. So price then just kept on dropping, consolidating. And then eventually, when I saw this pattern here and I identified some equal highs, I knew that price is likely to take them out. And if price gets taken out, if I look to the left, my original setup looks like it's going to be in play. And eventually it did. It took out the equal highs. First of all, it trapped traders. Everybody's trading this double top on the smaller time frame. I see the opposite. I see them as, you know, you're just about to get stopped out because it's market psychology. Everybody's doing the same thing. So eventually they get stopped out. And then triggered. Fantastic entry. And it just dropped to my level. So I took profit. It's a quick 4R, made up for the dollar yen loss. And it just kept on dropping. Really what I should have done is, and it's what I normally do, is have two entries. One is where I'll take profit at take profit 1 and bank 80%. And then the other one I could leave running at 20%. But I was so busy, just wasn't really in sync, was I? So that was a good trade. I thought I'll walk you guys through it. So that's it for today. Hopefully you guys enjoyed today's live stream, and I'll save it and post it on the channels. So I'll see you guys next week. Take care, everybody. Bye bye.